RKB Accounting specializes in cross-border taxation. Your one-stop solution for filing taxes in the United States and Canada. RKB handles income tax, sales tax, payroll, and bookkeeping, and also helps in incorporating your business on both sides of the border. Please visit us at rkbaccounting.ca to learn more about our services.
Okay, so we learned about creating a new company in the QuickBooks, setting up company information, company basic information, business number, address, year end, beginning of the year. Then we learned about creating a chart of accounts, subledger, and then we talked about company preferences, accounting, bills, general, everything. And there are two types, company preferences and my preferences. We also learned about accounts payable processing. We also visited creating a sales invoice and invoice template. We created a RKB training invoice template. And if you see, you can have your logo, email address, phone number, contact person. You can design the way you want it. So today, again, we are going to create an invoice and receive payment. Customer one. And this is the default invoice template in QuickBooks. We are going to use our own template. PO number 1234. Service 1. We write the message to the customer. It has been pleasure working with you. Memo. Financial advice. And my services is taxable for GST, HST purposes. So we are charging 13% HST on that. And since the services were performed in Ontario, so we charge 13%. Now we are going to receive payment. Receive payment from which customer? Customer 1. Now there are two invoices. So suppose we got the payment for the oldest invoices. It is asking me to enter an amount. If I have not entered an amount, it is automatically picking up the invoice amount. So suppose this customer has paid in part. He paid in the first invoice and then some portion of the second invoice as well. So he paid $500. So QuickBooks is automatically allocating amount due $226. Payment applied $226. And the balance from $575 is applied to the next invoice. Payment method, check number 345. If you want to write a memo, we can write a memo here. So we are going to post this, save and close. Now, if we look at our balance sheet, we have $856 receivable because there were two invoices, $130 and another was $226. Out of that, he paid $500. And the amount he paid, $500, goes to undeposited fund. And if we look at the customer, he has two invoices, type of transaction, transaction number, date, account, amount. And I would like to add one more column. You can customize columns, whatever you want to include, add or remove. So I would like to add aging. I would like to, most important is the open balance. And suppose if we want to remove the number, we can remove it. If you want to add it again, you can add it again. Okay. And let's adjust this column width. So these are most recent invoice, so it's not giving me any aging. Now you can see this invoice number, $226. Open balance is 0. That means this invoice is fully paid. He paid by check $500 and the check number was 345. There was another invoice, $1,130. So balance from this $500 was applied to this invoice, and the amount is still remaining outstanding, $856. Now let's go to receive this payment, $856. Receive payment. Customer 1, $856. Check, today's date, check number 782, $856. Collected by Smith. Save and close. We go to balance sheet again. Our accounts receivable is 0 because we have collected all the balances from our customers. Now the amount is going to undeposited fund. So what is this undeposited fund and why it is going to undeposited fund? Normally what happens in a business when you receive collection from your customer, you may not go right away to the bank to deposit it. You want to hold that once you have 3, 4, 5 checks, you can go to the bank and deposit all of them together. Or some company may have a rule that every Friday we go to the bank and deposit all the check. So when you deposit all the check on your bank statement, you will see the total of that deposit. From your bank statement, you will not be able to figure out which customer paid to you unless you have the copy of you have made a copy of checks and then you do a manual calculation. So QuickBooks make it easy for you. You deposit the check, and then when you deposited the check, it goes it goes into undeposited funds. Undeposited funds, and then you go to record deposit. So if you remember, we received payment of $500 and $856. So we check that. all types, payment method selected. Okay. And then which account you want to deposit. Right now we have only one bank account, CIBC. So we are going to deposit in that account. If you have several accounts, then you have to see in which account you are depositing. Save and close. So now you see there is no undeposited fund. When you go to your CIBC checking account, you see that deposit is appearing on your bank statement. And when you click on that deposit, you can see which customer it came from. Right now we only have one customer. So it could be customer A, B, C, D, E. But in your bank statement, if you see, it will be 1356. The bank statement will not give you the breakup of this 1356 that which are the customer has paid. So that's the use of that's the reason QuickBooks, when you receive payment from customer, QuickBooks post it to undeposited fund, and then when you deposit the money into your bank account, then you have to record deposit. We did the accounts payable. We enter some bills. I think for the materials purchase. And this was from ABC Inc. Let's see our vendor. ABC Inc. The bill was posted on 20th February for this amount, and the bill was created on 18th February, and the bill was paid on 20th February. So one way to record your expenses is to record pay bills, and when you pay that bill, you record the payment to the vendor. In some cases, what happened that you deal with your customer on a cash basis. Your vendor. So vendor came to you, he supplied the material, and he immediately wants a check. Again, you have an option that you record the vendor bill and then pay the vendor on the same day. Or else, you can directly record in one single entry, write a check. So let's see where is the function that write a check. So here is write a check. From which bank account? From this bank account. Dated yesterday. Who is the vendor? So ABC Inc. is already there, so I'm going to add another one. Currency, Canadian dollar. We can quickly add without adding the address. If we want to set up properly, then we can set up the address and everything. Vendor name. Phone number, email address, their address, payment setting, sales tax, HST is applicable, account entity. You can set up that usually when you purchase materials or services from this customer, which general ledger account you can post. So whenever you select this vendor, it will go directly to that general ledger, debited to directly to that general ledger. Additional information, vendor type, you can categorize your vendor, consultant service, you can create a new category, bread supplier, milk supplier, pop supplier, stationery supplier, like that. So suppose this is $1,113 we paid. Memo. Account. Which account we should put it? Okay, professional fees. HST is applicable. So it is automatically calculating the HST. But something is wrong. $1,130. So it should be 1,000. $1,130. Yes. HST goes here, $130. Q4 2022. So instead of doing two entry, recording the bill and paying the bill, we can record in one entry by writing a check. Save and close. Go to your profit and loss account, $1,000 professional fees. If you look at your vendor, BDC Inc., there was a check of $1,000. But the problem is that on your vendor, it will always show negative because you are recording through a single entry. We talked about meals and entertainment expenses, that only 50% HST is allowed. So let's write a check for meals and entertainment expenses. Sorry, you paid cash. I'm adding quickly. I'm not going to add the address and everything. Vendor, $113. Now, when you select the HST code, it is calculating 13%, $13 HST. Now, what you can do here, you can make it exempt here and put $106.50 and then post into GST HST payable. It is giving warning that GST HST payable is a control account, like it is created by the system itself because it prepares the sales tax return, GST HST return and reports. So normally the system will not allow you to post directly into GST HST payable. So that's what the warning is. Continue, and then you don't need to select exempt or because this is all itself GST HST account. So your expenses is $106.50, and GST HST payable is input tax credit is $6.50. So there is one way to post it like this. Save and close. Let's write another check. Now this one is $123. Now it will be difficult for you to find out how much it is. 123 divided by 113 equal to, so here it is 108.85 times 0.13 divided by 2. So $7.07 $7.08 HST is allowed. $7.08 HST is allowed, and then meals and entertainment is the balance amount, 123 minus 708. No, 123 minus 7.08. This is the way you can do it. But what I do normally is on $113 expenses, $6.50 HST is allowed, divided by $113. So I create a separate rate, 5.75. So sales tax code, new, M&E meals and entertainment. Now, which general ledger you want to post it? Sorry, I think this is for the sales tax return. Okay, where is the rate? So here you can put the rate, 5.75%. Let me do it again. Write a check, cash, XYG, $113. What happened? XYG $113. Why it is not picking the amount? Oh shoot. Oh, has it come to memorize transaction or what? Something has happened. Yeah. So this way you can see when you selected meals and entertainment, it is automatically calculating the GST. But this is not the correct amount, approximately correct. So in that case, what we can do, we can adjust the rate 5.75 to 5, maybe 5.8 to make it more closer. But meals and entertainment expenses is not so high normally. So 5 points, usually I use 5.75%. If you want, you can adjust it to 5.8 or 5.85. 7 close. So we learn about creating a tax code, a new sales tax code, and how we can post the meals and entertainment. Uh, Another thing which you can do, so Rogers is the telephone company, and you pay them for your cell phone, your internet, and other services. And they send you an invoice every month. So these transactions are going to come every month. So you can memorize this transaction. $113 memo you can write, invoice number or something. Telephone expenses, HST. Now let's memorize this transaction. You can add a reminder. So this is the posting we are doing for 10th January 2022. So there is a bill going to come in 10th February, around 10th February 2022. Then again in 10th February 2020, 10th March 2022, and so on. So you can add a reminder, and when you open the QuickBooks in February, a pop-up will appear in front of you that okay, sorry, let me talk to my son. He's calling me. Sorry about that. You can set do not remind me, or you can also make a automated transaction entry. So the if it is a rent, usually you see the rent is fixed amount. So it is a good idea that you can automate the transaction. And when you automate the transaction, it will be automatically posted. Your car leasing charges, you can automate that because the leasing charges usually is fixed every month. So let's say telephone. How often you post monthly? What will be the next date? Because I posted for 10th January. So it will be for the 10th February. And when I say OK, it will be memorized. This is very useful when you are providing freelance bookkeeping services. Then the client will give you 12 months bank statement or 12 months bill that you need to post the telephone expenses. And you can automate this transaction and post it quickly. So for example, in this case, the client has given me to do the bookkeeping for 2022, January to December. And he has given me 12 bills of Rogers to post. So we are going to post that. OK. Save and close. The transaction is more than 90 days past. Yes, because I'm posting a January transaction. Go to list, memorize transaction list. Click on that, telephone, enter transaction. You can edit your memorized transaction from here. Like if it is not coming every month, it is coming month after month. Or by mistake, you have already posted for February, March, April, and then you want to start it from May. So you can change the date that the next is May. Or 2022, you already posted like without using the memorized transaction. And 2023, you want to post it through the memorized transaction, then you can come and change the date, 10th January 2023, and click OK. So here we are going to enter 12-month transaction, 90 days past. Yes. Rogers, $113. This time amount has changed, $115. Save and close. Make sure the date is February. Yes. Enter transaction. Yes. Rogers, this time it has changed to $126. Save and close. This is posting for March. Let's post for April. Now you see that normally it used to be $100, $120, $325, but now you have added a bundle services. You moved your internet connection from Bell to Rogers. Now usually the bill is $225, $200 and above. So in that case, what you want to replace your memorized transaction. So I'm going to memorize again, and it will ask me to replace. Or for example, you don't want to post it under telephone because this bill is particularly for internet services. And you want to track your internet expenses. And in telephone, you only want to post telephone expenses. Expenses, continue. internet expense, 7 close. HST is applicable. Now memorize, replace. 7 close, yes. Enter again. Now you see it has changed. Amount had changed. General ledger had changed. Now this is your posting for May, $232. 7 close, yes. Post it for another month, yes. Now for June, $213. 7 close, yes. So life become easy when you have memorized transaction. This transaction I posted through record a check. Preferably you are going to record the transaction this way when you are printing the check. So BDC Inc. Okay, $23 professional fees. Now you want to write a check. You put in the memo. Print check. Check number. So I can put the right now I printed it to my PDF. I can put the pre-printed stationery on my printer and print the check. Check number it automatically assigned. And your check will look like this. So when you have pre-printed check, your some graphic design will be here, and then the name of the bank, bank address. Seven close. Now, if you don't need to print a check, you can enter this expense through a journal entry as well. But recording this way, you will have transaction recorded in the vendor, and that way you can see Rogers all transaction this fiscal year, no, all. So you can see, oh, I posted the Rogers bill for January, February, March, April, May, June. Okay, next bill is expected for July, or you forgot March bill. So you can try to find out what happened to the March bill, or you can ask your client, hey, you have not provided me the March bill. But you can record the same expenses instead of writing check through a journal entry, in which case you will not have this control that you can see from the vendor ledger which bill has been processed in that system, or have done the bookkeeping, or if any month is missing. Even though you can look into the general ledger and you can see telephone expenses, internet expenses for January, February, March, and something is missing. So company make journal entry 10th June, let's put it 10th July, 12th July. Telephone expenses $100. Now, when you are writing a check, you see that you put the amount, total amount, and system will automatically allocate net amount and HST amount. Here you don't have that facility. You have to manually calculate that. GST, HST, $13, and it was paid from my CIBC checking account. 7 close. Yes, it is no more than 90 days. 90 days past. No. You can even memorize a journal entry. So if you have journal entry, you can memorize it because it is repeated every month. For example, your client want a monthly profit and loss account to be produced. Now, usually you create amortization, depreciation on your fixed assets on an annual basis. And since you are producing a monthly profit and loss account, you have to divide that depreciation amortization in 12 months, and you have to post it every month. A depreciation entry you will only post through a journal entry. So in that case, you want to memorize a depreciation entry and post it on a monthly basis to produce the income statement or profit and loss account for your client. So we posted that. Then let's look at your profit and loss account. Refresh. So you had professional fees, and the telephone expenses is not appearing because the dates are not correct. So I'm going to change the date 2022 to till date. Refresh. Here is my telephone expenses. So January, February, March, July is coming because April, May, June, I posted it under internet expenses. So July is here, and then you see, okay, July is here. I have not posted August. So you can do a journal entry. If you have the memorized transaction, you can do a memorized transaction, or you can open this transaction, create a copy. You can create a copy of this journal entry. Okay. And you can put $200, 36 to 26. Save and close. So we posted for July. This is supposed to be August, but by mistake, I didn't change the date. So this $200 is for July. So you can memorize a transaction. You can create a copy of the transaction. Customer, if you're sending him same goods again and again, instead of creating an invoice, you can open this invoice, create a copy, change the date, whatever. If there are changes in the amount or services, you can edit it here. If not, save and close. And also you can memorize it. This text here, no, all. So now you see I have posted another one. Okay, so these are the most common basic tool to do the bookkeeping. Accounts payable we covered, accounts receivable we covered, chart of account, record deposit, write check, memorize transaction, copy a transaction, print check. The last thing is remaining payroll. I send the link for the payroll so that you can understand how does the CPP EI calculation works. You can do the payroll in QuickBooks, but when you buy QuickBooks, there is a charge for that. You have to pay for QuickBooks, and then you add a payroll services to QuickBooks, and they will charge you extra separately for payroll services. I don't remember how much I'm paying for the payroll services. On top of that, they are also charging me $2 per employee per month. So suppose if I'm processing payroll for 100 employees, $200 on top of everything they are charging. So if your client has a small business, doesn't has a QuickBook, you are doing the bookkeeping in Excel, you can run the payroll through the CRA. But in that case, you have to maintain an Excel sheet for every month. You can come to Canada Revenue Agency website and you can do a payroll deduction calculator. Payroll deduction calculator online. I agree. Salary, name of the employee, hijack, employer, Boston, province. You can select the province in which the employee is working. Right now it is assumed Ontario. Pay frequency, bi-weekly, weekly, semi-monthly, monthly. Let's say bi-weekly. Which year? 2023. Month, February. And let's say 17th February was Friday. Next, how much you pay, you calculate manually, number of hours times rate you have agreed with the employee, say $2,300. Vacation pay, there is a mandatory vacation pay to be paid to the employee, either 2 weeks of vacation, paid vacation, that means he takes 2 weeks off and get paid, or you can add 4% to his paycheck. So suppose in this case, I'm going to add 4%. So $92. Next. I don't remember if we talked about BPA, basic personal amount. This is the amount. Up to this amount, an individual do not pay federal tax. So if your income is $15,000 in 2023, this is the 2023 limit. If you look at 2022 limit, it was less than that because they adjusted for the inflation. So it is now 15,000. So if you have an income of only $15,000, you do not have to pay income tax on your personal income tax return. But Ontario will ask you to pay because Ontario limit is 11,865. So 15,000 minus 11,865, you will pay Ontario income tax on that money. But if your income is 11,865, then you don't pay federal income tax, you don't pay provincial income tax. CPP, there is a maximum contribution limit, how much you can contribute to your CPP in a year. If you click on this one, you can see limit year-wise. So this is the amount. Once you reach your deduction of CPP, then you do not contribute to your CPP. So it is asking to check the box that have you reached your maximum contribution? Are you CPP exempt? Mostly if you are at age of 65 plus, then you do not deduct CPP and the employee do not contribute CPP. But they can still elect to contribute to CPP. Year-to-date amount. If the previous payroll was prepared by somebody else, then you put the year-to-date amount so that system will automatically calculate if they have on this payroll they have reached the maximum limit. Employment insurance. Every employee pay employment insurance. Again, like CPP, it has also has a maximum limit. I think 960 $70 for the year 2023. EI exempt. If you are the owner of the business or you are the distant relative of the owner of the business, you do not contribute to EI premium, because even if you contribute to EI premium, the employment insurance benefit is not available to you. So suppose you are the shareholder of the corporation and you are paying salary to yourself, and you are also paying employment insurance, and you yourself see that my business is kind of came to zero because it's pandemic, everything is closed down. So even if you say I'm firing myself from the corporation and go to apply for EI from the Service Canada, they will not entertain your claim. So in that case, you mark yourself that I am EI exempt. And in the case of CPP, employer contribute the same amount, but in the case of EI, employer has to contribute 1.4 times of the employee contribution. Calculate. So this is the name of the employee, period, your gross income, vacation pay, total income. This is for CPP and EI limit, how much you are entitled to for this period of your payroll. This is your federal income tax. This is your provincial income tax. Total tax deduction $387.50. CPP $134. EI $39, $38.99. So these three amounts are deducted from your paycheck, which is total deduction is $560. Your wages, including vacation pay, was $23.92 minus deduction $560.80. You will get a check of $1,831.20 in your hand. So this is basically your pay stub, that how much you are getting. But each pay stub has another element that needs to provide a year-to-date amount. This is only for this paycheck. What about if there was a paycheck in January? Here you can see employer remittance summary. As I said, employer has to contribute same amount of CPP. Employee contribution, employer contribution. Employee EI $38.99, but employer EI contribution is $54.59, which is 1.4 times. And the income tax deducted from your check, federal and provincial, was $387.50. So total amount is $749.70. Your employer has to remit this amount to CRA. Now let's do a payroll in the QuickBooks. So employee, new employee, John Smith, SIN number. It will give me an error, invalid. Okay, it doesn't allow me. Gender, male. $2,001. Address, you can put a whole lot of things: email address, phone number, province, city. Additional information, how much is payroll. So you can add a schedule here: monthly, weekly, bi-weekly, semi-monthly, annual, whatever the frequency you are paying or your client is paying to employee. Add new. Tell us how you will be processing payroll using QuickBooks Desktop. I'm going to do it monthly. How often you will pay? Monthly. What is the pay period and the date? So this is, I'm going to do it for January. What date should appear on the paycheck? Of course, 31st January. What day should appear on paycheck for this pay period? Last day of the month. Because in February, it will be 28th February. In April, it will be 30th of April. In April, there is no 31st April. Okay. Earlier than today, yes. Okay. How much you are going to pay? So salary. So I'm going to pay him 3,000 per month. Then the last thing, what you're going to do, when we were running the payroll here, you saw that the basic personal amount, which is not taxable, 15,000 and 11,865. Since this amount changes every year and sometime middle of the year, so when you are setting a new employee, you should verify that. And this amount is noted here, 15,000, 11,865. If it is not correct, you can change it here. As I told you, if you are processing the payroll for the employer and the employer is the owner of the business, you can make him exempt. And to make him exempt, you uncheck this box and remove this 1.4 as well. But in this case, I'm processing for an employee, so I'm not going to uncheck that. Okay. Vacation pay, if you want to accrue, there are two option here. You can retain it, or you can pay every period 4%. So I'm not going to make it complicated right now. When you practice, you can make it more complicated. And if you have any question, you can always come back to me. Okay. Sick accrual hours. Normally, some company may have policy that they provide sick hours. Like if you are sick, say 5 days in a year, you are allowed 5 days sick in a year. So those you can enter here, how much you have accrued so far and how much is to be accrued later part of the year. Okay, so let's do the payroll. Payroll processing has changed, and I'm aware of this charge. Okay. So you see, I was supposed to run the payroll for 31st January, and that's why it is giving me a warning sign that your payroll is overdue. Start schedule payroll. You have not entered year-to-date adjustment. So, for example, if you have done this is we are doing for January, but suppose this hypothetically, if this was a payroll for March, and you have done the payroll for January, February in Excel through the CRA payroll deduction calculator. Shinu is saying I'm not able to join. I don't see any notification. Copy joining information. Try now. Admit. Okay. So it is asking me to enter the year to date adjustment. So suppose if you have done the payroll in Excel for January, February, and now in March you started doing in QuickBooks. So January, February amount you can enter as year to date adjustment. That is important because you need to find out what is the maximum amount of CPP you can contribute in a year. So suppose somebody's salary is 10,000 per month, then probably around August or September, or after August and September, he will not have to contribute to CPP and EI. Okay. So John Smith, 31st January paycheck date, 31st January open paycheck. You have not recorded the hours. Yes, I have not recorded. Now, suppose if you are paying weekly, bi-weekly, if it is not a fixed salary, then you can put the rate here and you can put the hours and then you can record. Now, this is a fixed monthly salary. So hypothetically, there are 5 weeks. I'm not going to calculate how many weeks and how many hours were in January, but roughly around 5 hours times, 5 days in a week times 40 hours, so 200 hours times 5 weeks in a month, so 1,000 hours. So I put it 1,000 hours. This is important because if you fire this employee and he wants to go to apply for EI, or even you as an employer responsible to issue him a ROE, a record of employment. I have mentioned about a record of employment in the link I shared for the payroll. So as an employer, you have to issue an ROE and provide a copy to the employee, and the employee will go and apply for EI benefit. And on the record of employment, you have to provide him, I think, last 30 or 40 paycheck details. And from the paycheck details, you need to input gross pay and number of hours worked. For 26 period, yes. For last 26 period, you need to record on the record of employment last 26 gross pay and number of hours worked in each pay period. Save and close. Continue. Create paycheck. You have two options. You can print a paycheck if you have put the check stub on your printer, or you can create a pay stub and send it to employee. Print. You can email also. So the pay stub will look like this. If you have printed a check, then it would have looked like this, like his name, payroll amount, and then below that, these information on the second stub. These information will come, and this information will also be repeated on the third stub. So you tier that third stub for your record, and you give the check and the pay stub on the second stub to employee. So this is his year to date amount. This is his current amount. Salary 3,000, CPP deducted 161, EI 48, federal income tax 329, net pay is $2,460. Your payroll is done. Now you know that you have done the payroll for the month end. So you need to send the CRA remittance. So you go to report, employee and payroll, and the remittance you send to CRA, that report is called PD7A summary. So you need to print this, print, save it, January 2023, CRA payroll remittance, RKB training company, and you send it to your employer, your client, that you need to pay this remittance to CRA on or before 15th of the following month. So this payment is to be made to the CRA by 15th February 2023. And hypothetically, if you have run the payroll for January, February, March, April 2022 for all the months, then you can go and create the T4. QuickBook also allow you to create the T4. But in this case, his SIN number is missing, address is missing, so it will not allow me to create the payroll. So when we are working on tax software, at that time we will see how do we create T4, assuming that this employee has already been paid for all 12 months, January to December, and then we will create T4 from there. However, how to create a T4 in the QuickBooks? The reason I create a T4 in my tax software, because that is convenient, that allows me to carry forward file from last year to current year to next year. It has some warning feature, and it has the feature that I can transmit electronically to CRA. So payroll forms, T4s, you can print it here. So you can see John Smith, but when I check it, it will not allow me. City, postal code, SIN number is missing. Okay. I don't know his SIN number, so I can't do anything. Print. You cannot print T4 forms before reviewing them. Okay, let's review. So this is how the T4 looks like. Employer name, payroll account number of the employer, province, employee number, social insurance number of the employee, employer code. If the some company, if they have big number of employees, they can code it. SP for salesperson, AP for admin person, FP for factory personnel, EI exempt or CPP exempt, gross salary, income tax deducted for the year. These two columns comes automatically, because how much amount you can have on EI insurable earning depends on how much you have contributed. And once you reach your maximum limit, hypothetically, if you see that your employment income is 120,000, but insurable earning, you will see based on the limit. So here it will show only 50,000, 52,000. QPP, if you are working in QBack, employment insurance premium. Some company have employed they are with an union, like I think Postal Canada employees have an union, and they have to pay union dues, and the employee union make a direct contract with the employer that whenever you pay to employee, deduct this amount for union dues. Some employer may have a registered pension plan. So some of them allow you to contribute to your pension plan, and employer will match that. So in that case, we will put it here. Once you have a registered pension plan from employer, that is going to affect your overall pension. That means whatever CPP you paid, you are entitled for your pension. And then whatever you contributed through RPP, there are some entitlement will come from that. So once you record your pension adjustment, it is calculated automatically when you put the RPP amount. So when you put your RPP amount, it will calculate it automatically. And when this form goes to CRA will adjust your pension plan from CPP. These are the column if you're providing any benefit to an employee or an employee who is working for different category like fisherman, fisher salesperson, fisher's gross, WCB, I don't know. So based on that, you can put these amounts in these field. Okay, now I can print it. Okay. Okay. So anyway, it didn't allow me to print, but I'm okay with that. When we do it on the tax cycle file, we can print it. Payroll, memorized journal entry. That's it. Now I think you can download the 30-day trial QuickBooks. My suggestion would be first practice the most basic function or your requirement in your day-to-day bookkeeping. Practice those as much as possible for a week. And then what you can do, you can go to each menu and see what is this new company. Oh, I can create a new company. Open company. What is backup? Create a backup. So you can create a backup copy of that. So you can play all this with. And if you have any question, you can post on WhatsApp or we can cover that in class. Close company, switch to multi-user. You can set up for this company if there are 2-3 people working. So you would like to set up a you can set up user ID and password. So you will know that which staff or which person has entered which entry. Otherwise, one staff will make mistake and he will say, no, I didn't enter this. But when you post a transaction, it will show which user ID has posted that transaction. Similarly, edit, use register, use calculator, find, search. Search is very important. View, you can play with this. List, let's look at this. What is item list, price list, payroll item list, currency list? You can go through one by one. I think I have covered pretty much what was my plan to cover you on QuickBook Desktop. Unless anybody says to me that any specific topic needs to be covered on QuickBook Desktop, I can try doing that in next class. Otherwise, from my side, QuickBook Desktop is completed. You can install your free 30-day trial in the QuickBooks and you can start working on it. I can send you a sample profit and loss account and some items. So you remember what we discussed during the start of during first 2 classes of this training class: meals and entertainment, home office expenses. So I will send you one sample where you will see you need to record salary, wages, you need to record meals and entertainment, you need to record traveling expenses. So you can record that in QuickBooks and see how your profit and loss account looks like. And then in the next class, if this one is done, then in the next class, we will work on QuickBooks Online and Xero Online. Wonderful. Any question?